because when you make it harder to buy, you have less home buyers, even though there's more demand, because demand doesn't equal ability. And when there's harder to buy, more renters. And what happens with that supply and demand again? More demand on a limited supply, rents go up. In a recession.
Well, I don't know if you guys have heard, but Ben Mala says the greatest opportunity for wealth generation is coming. Yes, I was lucky enough to see him speak over the weekend. We've got the one and only Grant Cardone and Ken McElroy saying much of the same. But alas, we still have the Crash Bros talking residential. So I thought I would talk to Dion and Matt about residential and commercial. What are they seeing today? What are they seeing in opportunities? Because again, all of us are still looking to do deals. We're just folks that have been doing it a while. Matt, I'll go to you first. What are you seeing today? Residential, commercial, anything out there look exciting?
Uh, I'm not catching a falling knife with office space.
Yeah.
We'll let other guys catch that, but other stuff that's more specific, there's definitely resets happening. There's definitely banks kicking cans down the road. I'm still not seeing it on anything residential. We did seven rents over $3,000 per month in June. Those are all-time highs. In July, so that was June. We have one unit going into July that's available, just one.
Wow.
And we're pricing it higher than where we price other stuff. We are seeing a lower quality of tenant, more of a lower quality. So it used to be, 80% were not very good and 10% were okay. And then, 5% were really good and 5% were just, you are going to leave in a year, go away. And so now that's just changed where it's now like 90%. It's 90% like you're not a fit, go away. And then we are seeing still that 5 and 5 split though. 5% that look really good and 5% that will be gone in a year because we're seeing trade down. We're finally starting to see some people trading down into our stuff from high A to high B. So that's what I'm seeing. But I'm not seeing any deals on buildings.
No,
I'm not saying everything is still high priced with even 7% rates. That's what I'm seeing.
Yeah, it's crazy. Dion, what are you seeing out there?
So I was going to make a video on my channel and I decided not to because it was going to be too mean. So I'm glad I'm here on your channel and we get to talk about it.
Yeah, I like it. Let's do mean.
But when it comes to recessions, people have really short memories and they think, okay, the 2008 housing crash caused a recession. So when there's a recession, we associate it with housing crashes. And then we think, okay, of the last 6 recessions, 4 times home prices went up. 1 time it went down a little over 1%. And then we had the housing crash that caused the recession. Right. So what we see when there is a recession, so if we see a recession coming, in 1934, we had one of the biggest recessions ever. Construction workers weren't working anywhere. We had the stock market crash. So they came out with the FHA program. They said, and it wasn't to help people own homes. It was, if we fund people building houses for bad credit, bad debt to income ratio people, not to help them, it'll get these construction workers back to work. It'll get the supply chains going and will help the economy. So FHA loans are designed to shorten recession. So what are we going to see if we have an actual recession? First-time home buyer programs.
Go.
You might see as of November 18th of last year, and I can't remember the last time I remembered specifics like this, so something's wrong today, but we had the Fannie and Freddie said, we'll do duplex, triplex, and fourplex, 5%. That will make it easier for you to buy because we're trying to shorten or limit the recession. So what we see is home prices go up because when you make it easier for people to buy houses, but FHA loans, 5% down on small multifamily, you increase demand on a limited supply. When you increase demand on a limited supply, even though I only have this PhD, public high school diploma, I can suss out that that's going to increase prices. So what I want to be coming into a recession is the person who owns properties, because here's the thing I didn't want to say on my channel. So when you hate me in the comments, make sure you don't like Dion talk financial freedom. This is not a Zuber quote. Do you want to fix the system or win in the system? Right? Because if we want to fix the system, we all have to become Amish and make farms and build houses for our neighbors. It'll be like Joe Kuhn, the investor in stocks who volunteers for Habitat for Humanity, goes out with painting crews and runs a crew to paint things. That's what it takes to fix the system. Not that many people are going to be doing that. To win in this system, I want to be the person who owns the assets that benefit from a recession, because when you make it harder to buy, you have less home buyers, even though there's more demand, because demand doesn't equal ability. And when there's harder to buy, more renters. And what happens with that supply and demand? Again, more demand on a limited supply, rents go up. In a recession, what happened in 2009 and 10? Whole bunch of foreclosures. Yeah, Class A luxury rents might have come down because people didn't want to pay for luxury. But in Class C and where I invest, in Class CB, where you guys invest, more demand means higher rents.
Yeah, it's pretty wild. The thing that I really, when I took away from Ben Mullah's talk is we're repeating what we did last time, just in a different asset class, right? Short-term debt, bad assumptions, new investors thinking it's easy money. It's like, it's amazing to me that we repeated the same crap in residential, in commercial. But just like last time, people to understand the lag that all of this done, right? There are tremendous losses coming. There are some extend and pretend. There are some, cash in refis, all this stuff. And I could see it coming. I actually can tell you this: in Fresno, California, my market where my buy box and network and all of that is, I'm starting to see buildings listed at stupid prices. Now, why would an owner list a price at a stupid price? Because they're hoping some idiot with a 1031 exchange bails them out.
Yeah.
Right. And they're trying to get out for the price that they pay. Sorry,
right.
folks, that thing is not worth what you paid. But again, what happened in the background? Their financial institution at their year said, hey, you're in trouble. You're not getting your DSCR. You're below 1.25, blah, 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 blah. You as the owner go, okay, great. Give me time and I'll sell the property, which the bank's like, okay, make your payments. We'll give you 6 months to sell the property. All that stuff is starting to happen. And I want people to realize there was a building that Olivia and I bought in the last cycle that we saw 2 years. For 2 years, this building was listed at 1.44. Why? Because that's what the owner owned it for. The problem is the building kept deteriorating because there was the guy knew that he was going to lose it. So he fixed nothing for 2 years. Olivia and I eventually bought the property for nothing down for $700,000. Right? I mean, this is happening. There are buildings that are starting to fall into repair, but they're not going to show up until 2025.
Right.
So I think the slow moving train wreck. And again, you got to feel for the owners, right? They overpaid. They got caught up in the hype. They got bad debt structures. It's all blowing up. But the first step is they'll be listed at stupid prices because there's a bank and an owner involved, and they're going to hope and pray that some other idiot bails them out. That's what's going on right now.
Totally agree. I saw a property this weekend. They raised the price 10% in 45 days. And I was like,
what are you
watch
doing?
This. I'm going to make an offer 10% off of your old number. Wait until you're really insulted. But this is the silliness that we're seeing. And again, I know that that's a bailout for that guy. Too bad, so sad. I'm not the government. So I'm here to buy based on market.
Yeah. And again, this is the problem. The other thing I will tell people is take the quick loss. Because I wanted that building at 1.44. When he first listed that, it probably would have sold for 1.2, maybe 1.225. Because I was tracking it and I had the numbers and financing and all of that. But because he was trying to hold out, not lose any money, he ended up losing the property, and we got it directly from the bank for less than half because it was just wrecked.
First money
take the small
is often your first money is often your best money. Take it and take the skill, take the lesson, and then recapitalize and redo it.
Yeah, the other thing we're seeing in the residential market, I don't know if you guys saw it this morning, but new home sales crashed 11%. But again, I think there's a story behind that number too. I think what we're seeing is the big builders win and the small guys just aren't playing.
Nope.
Which is going on, which again, if you are in the inflation is going to ramp up phase, you want to do that? Build less housing. You'll get shelter inflation going up again, which is scary to think about. Dion, what are you seeing?
So I had caused some argument on the Book of Faces again the other day because my favorite thing to do is argue with dumb people. But I said if interest rates go up, building slows, right?
Yeah.
Builders don't have a margin, so they slow. So you now limit supply when there's demand. And if interest rates go down, you supercharge demand on a limited supply. So in either case, prices could go up. And some people disagree, which is fine. But here's what I'm saying in the teacher moment. It is very easy or very hard to remember what it's like to not know something. And so when we talk about residential versus commercial, it's subconsciously clearly delineated into two separate asset classes. And the new investor out there hears real estate. And if real estate has bad debt and these buildings are coming for sale, people will start to think, like Richard Fain, a YouTuber who has a very successful YouTube channel and is doing very well financially right now. I have no problem with anything, but in 2022, we made a video, still there, on it. Richard Fain was making videos on, here's what I'm doing. I'm selling my really expensive house with all my really nice cars. I'm going to sell this house. And then I'm going to rent for a year, because in a year, the crash is going to be so bad, I'm going to buy 2 or 3 houses with the amount of money that I got from selling my house. We made the video. I don't think he watches our content. He didn't sell his house. About a month later, he made a video of, hey, I've kind of rethought, not going to do that. And he still shoots from his garage with his cars. But just because he didn't doesn't mean that there's a lot of silent people out there.
Oh yeah.
We'll call this the silent minority, not the silent majority, that are out there that sold their house. They're thinking, I'm going to bank up all this money, and in 2023, when the crash happens, I'm going to make so much money by buying a bigger house for less money or lower rates. I'll wait till 2024 now. We're trying to stop that from happening today.
There you go. Well, guys, you're amazing. Thank you for being here. Matt's got to take off. Matt, where can they find you?
Lumberjack Landlord, YouTube and Instagram, 11:30 a.m. Eastern time this Sunday. Be there if you want to do it better.
There you go. Dion, yourself?
Find me right here on YouTube, Dion Talk Financial Freedom.
Guys, you're amazing. Take care. Talk next week.
Thanks, guys.
Later.
Bye.
Bye.